Nicholas Borners of Capital Link, and I have the privilege to welcome you to another panel of today's forum. This panel is focusing on the new landscape of bank finance for shipping. Access to capital is one of the most critical topics for a capital-intensive industry such as shipping. And I am delighted that we have with us today an amazing panel. We were just chatting before coming live that, yes, we cannot be together in person and shake hands, but this gives us the opportunity to bring together experts from all over the world. So this connectivity allows us to have tremendous content. And I will turn it over to Dan Rodgers, the partner from Watson Farley Williams. I would like to thank each one of you for your support over the years for making this forum a great success. And Daniel, I will let you introduce our speakers. They don't need introduction, but still, the floor is yours. Thank you to everybody.
Thank you, Nicholas. I'm Dan Rodgers. I'm a partner with Watson, Farley, and Williams in their New York office. And I have the pleasure today of leading this panel of well-known bankers and people, I think, who have a real insight as to what we're going to be talking about today. And so today we're joined by Philipp Wuenschmann of Berenberg Bank, who is Global Head of Shipping. And Philipp joins us from Hamburg, Germany today. We also have Mr. Shreyas Chipalkatty, who is the Global Head of Shipping with Citibank, who joins us from London. Also joining us from London is Ilias Katsoulis, who is the Global Head of Shipping and Global Credit and Financing and Solutions with Deutsche Bank. Then we also have Christos Tsakanos, excuse me, my tongue got twisted around, who's Global Head of Shipping with DNB, and he joins us from Athens. And finally, we have Evan Cohen, who is a Managing Director and Group Head of Maritime Finance at CIT, who joins us today from Naples, Florida. And myself, I am in New Orleans, Louisiana. So we are really all over the place today, but we're here together now. And so without further ado, I think we'll just turn over to our agenda and begin this conversation. And I think the first thing we want to talk about today is what happened during what I refer to as the COVID times of the last 18, 19 months. And I think the first question to be posed is, did the pandemic permanently or only temporarily alter the commitment of your institution to the sector? And so the way it sets up on my screen, I'm going to start to my immediate top left, and that would be Christos. How are things affected by COVID at DNB?
I think that things changed as time went by and as we started getting used to and living with COVID. I have to say that at the beginning, there was a lot of uncertainty when it comes to what happens to banking and what happens to shipping. And, we had to sit back, try to understand, which sectors we were exposed to. Our clients did the same. We had commitments we had to honor, of course. We did new business, but very, very selectively. And as the months passed by and as we started getting more comfortable, I have to say that confidence came back fairly quickly in the shipping markets. We saw, a couple of the shipping sectors coming back in a very strong way. And we had the same, reaction in the bank at the beginning. Banks, ourselves included, were quite cautious and uncertain about, what lay ahead. But as months went by, I have to say, it turned out to be a pretty good year for financing. We've seen volumes increase quite significantly the past 6 months or so, I would say. And we have also seen very high capital markets activity, which is also very important. So I would say that I haven't seen a reduction in commitment when it comes to banks, certainly not from DNB's perspective. If anything, it's been much, much stronger, and we see much more competition for good projects as well.
Thank you. Evan, what's the view from CIT?
Yeah, there was really no real change in commitments. If anything, our commitment increased as the year went by. So in the beginning of the COVID period, as you say, it was, I guess, a bit of a question mark. So what's going to happen to the demand for container ships and for tankers? But we didn't shy away. And as it went on, we leaned into it. So we saw a lot of our good container clients benefit from the market that we didn't expect. Well, we've done We've done more business this year than we have in the past 2 years combined. So still committed, even more so. And it's been, to echo what Christos just said, it's been a very strong year for us.
Thank you. Shreyas, how are things looking from Citi's perspective?
Well, not really much more to add to what Christos and Ivan said. I think similarly, March 2020, I think everybody was terrified that this was one of those meteor hitting the planet and killing dinosaurs moment for shipping, but it turned out to be quite the opposite. I think what we're seeing now really is we've ended up in a good place. Cash balances, liquidity, leverage mostly is under control in the shipping world. But I think now the next challenge is, how do we finance the ESG overhang and stuff like that? So, we've ended up luckily in a position where we can confidently address some of those challenges, which would not have happened had COVID played out in the way we were expecting in March 2020.
Thank you. Ilias, what's Deutsche Bank's view? How do you find yourself in agreement with your colleagues generally?
Yeah, I do actually. It's a similar story for us. I think we've been very busy last 12 months, probably busier than in some recent years. I think overall, my sense is that banks were kind of starved from deploying capital the year before because of the slowdown that took place as a result of COVID. And I think a lot of banks were very, tried to compete aggressively to kind of deploy capital over the last 12 months. I think that's been a benefit to borrowers who have had very strong availability of capital. As I said before, we've also been very active in the market. I think we have had the benefit also of a very healthy, underlying shipping market, at least when it comes to container ships and bulk carriers for a period of time, which alleviates any concerns with respect to portfolio. So I think the focus has been new business, and I think kind of remains so as well at the moment.
Great. Well, that brings us to Berenberg, and slightly different perspective possibly from Berenberg, but I'll ask you, Philipp, what's the view?
Yeah, thank you. I guess quite the same as the colleagues pointed out, but let's remember that already back in 2019, before the pandemic started, I think fundamentally there was a lot of positive in the database about shipping, but we couldn't really prove it or have told too many years to clients, to investors, and to our internal senior management that shipping will do better in 2 years. And it never happened really. So I think for us at least, and how I do see it with talking to investors, it is a kind of proof of concept for shipping. This last year turned out to be positive. It had its difficult times, the first half of 2020 probably, but since then it has turned out to be a major development for shipping. And I think we can underline only that this, coincidentally or not, shipping comes out of the pandemic better than it started into it. Yeah.
That's very interesting. Let me ask a sort of related question. We've seen a fair amount of volatility in various market segments over the past 18 months. Tankers were up, then tankers were down, dry bulk's been up, containers are up. Do you feel that, we're entering a more stable and predictable period going forward at this time, or do you expect there will still be segment volatility? Philipp?
Okay. I guess we are fairly comfortable for the next 12, 15 months or so. Yeah. So I guess the container and the bulk market are very strong at this point in time, and we consider this to be stable for that next period. I think the next challenge will come into 2023 when first vessels will touch base in the container segments from the new building side, and all over the regulations with regard to ESG will kick in a different way you can see it today, but you don't really feel it. So it will change, or at least bring a new perspective. And the other point, which is worth mentioning in this respect, in terms of risks that might turn up, is obviously interest, which might become a topic for shipping again after quite a while. And we see more clients caring about this issue when asking for hedging strategies and so on and so forth. So this is a topic which comes on the table of the CFOs more than it has been before. But this again, for the next 12, 18 months, we are positive.
Great. Evan, I know you guys are focused on tankers, bulkers, and container ships. I know with container ships, there's been a lot of reporting lately about a lot of new building orders, particularly in the mid-size range. Do you think that that's going to provoke any volatility in that sector or any other segments that you guys tend to be focused on?
I think there's enough experience on this at round table. Everyone will appreciate it's always going to be volatile. That is shipping. So are ship owners going to order more ships? Oh yes, they will. So what month or quarter they hit the water and change the dynamics of pricing? Okay, this you never know for sure. Yeah, there's lots of new buildings going to come out of the yard in container ships, so there will be a softening in. Well, that will be a pressure in the container market. Yeah, we just build that into our outlook. So will containers? I think you can safely say, without making a prediction or forecast, that container earnings will come down at some point, and tanker earnings may improve at some point. So, yeah.
Will that affect your pricing in any way?
Yeah, pricing is usually not one of the first three questions. It may affect the leverage. It may affect the other security you want to see. And sure, if we're competing against some of our other good friends doing senior debt, it may affect the pricing, but we look at other things first.
Okay. Christos, what's your view of the next 18 months going forward? Do you see a strengthening or a weakening in any of these market segments?
Well, we have been through cyclicality many, many times, and all of us have financed capes over $100 million. We've seen VLs earning $150,000 to $200,000 a day. We know the market is cyclical. The key is, I don't think anybody can predict what's going to happen in the next 18 months, but what we can do is we can try to figure out where we are in the cycle, and we can try to structure accordingly based on where we are in the cycle. I mean, if you're buying an expensive ship on the back of a very profitable charter, you have to make sure you amortize your debt very, very quickly. You have to make sure the counterparty you have is a very strong one, so that you have relative certainty of cash flows. So I think rather than trying to predict the market, what we try to do is try to put structures that make sense based on where we are at the cycle. And that's the only way to guard against doing silly mistakes that we've all done in the past, getting carried away that we have a new reality now in containers, world trade has changed, and this is how it's going to be forever. The big issue, which complicates things even further, and Shreyas alluded to it before, is the ESG elements, the uncertainty around energy transition. And I think that is really a variable that we have not really dealt with before. That's what we spend most of our time trying to figure out, rather than trying to predict the cycle.
Thank you. Shreyas, I see you nodding your head. What are your thoughts on this point?
I think Christos and Evan have both nailed it. I think, look, it's going to be continuously volatile, as Evan said. That's not going to change, and luckily that keeps us in our jobs, because the whole reality is you need people who know what that means and manage to deal with it in the lending space. So that's not going to change. But I think one of the things that, before we get to the ESG challenge and the next 10 years of the overhang of how we're going to finance it, there is a more immediate issue now, which is the energy crunch, which is unfolding as we speak, around natural gas, coal, lots of things happening at the same time. And you're entering the winter period. So I think this is the type of stuff that causes the volatility that we are used to seeing, right? There will be winners and losers from this. It's hard to pinpoint exactly how it will go. But if, as some people predict, again, natural gas goes to $100 per million BTU, $6 per BTU, per million BTU for transportation, which would translate to what, 200,000 for an LNG carrier, that it doesn't count at all. It's meaningless in the scheme of things. So who's bidding those volumes up? Who's going to pay for that? How are consumers going to react? All of this is going to unfold in the next 6 to 12 months. So I think we are entering a period of, for shipping and energy, is shorter period of extreme volatility right now. Not necessarily for containers and logistics generally, but those guys have their own issues. I mean, the more they, the better they do as a result of COVID and the crunch in supply chains, the more cash they have and the more investments they're going to make on the logistics side, and getting more and more into e-commerce, as we've seen AP Moller make some investments in that space. That is the right thing to do because that's where the more attractive part of the value chain is. But at the same time, these are long-term, multi-decade investments and strategies. Will container shipping be profitable in the same way as it is today for 20 years? No, it won't. You're going to have shorter periods of pain. And so again, we have volatility, we have investments in areas that have longer-term strategies. You just need a whole bunch of clever people to deal with it, and that's what we have in the shipping space. So enjoy the ride ahead.
Okay, Ilias, why don't you finish up on this point? What are your thoughts?
No, I mean, all good points from the colleagues here. I mean, my perspective is that there is a bit of a degree of euphoria right now, just driven by the strength of the container shipping market and how well the dry bulk market is doing, which means sometimes people forget, that we are still, working in a very volatile industry. The way we see things is very similar to how Christos articulated before. We look through, we approach things not on a short-term basis. We look through structures, clients, fundamental credit stuff, and we try to do business in current markets in a way that will not expose us to unnecessary risks in the future if there is volatility. So that's our perspective, and I think that's the only way we can kind of credibly continue doing business in shipping and avoid kind of historical mistakes.
Understood. Let me ask a follow-up question on that. Are there any segments that the bank intends to focus on, as opposed to just being generally available for any type of ship financing?
I mean, for us, our offering to the market is, I would describe it as fairly broad in terms of the type of asset classes that we look at and the type of deals we do. So we don't tend to constrain ourselves into saying we will only do tankers or bulk carriers and so on. So we look at the credit fundamentals of any given transaction. Needless to say, there are some sectors that have more positive fundamentals than others. The wind sector is clearly something that's is showing a spectacular growth. The tanker market, from a valuation perspective, is very interesting right now versus some of the other markets. Doesn't necessarily mean that we focus specifically on those markets. We look at transactions across. But we do try to maintain a balanced portfolio, and that's probably another restriction that we as a bank kind of have in terms of how we what type of opportunities we focus on going forward.
Okay, thank you. Let me ask the same question to Philipp. What are your views on that? Are there any segments that you see as being particularly interesting, or are you going to be a more balanced portfolio like Deutsche Bank?
I guess we are a bit more, let's say, limited to the main liquid segments. This doesn't change and has not changed over time. So I think, except for cruise and offshore, which we don't do simply because probably it's not our size. It's basically all segments we look at, and basically we follow also our clients and their I must say that next to the bulk market, which came out strong this year, the container market changed a bit in the sense that you, for the first time since very long, could see contracted cash flows. So the whole assessment of a container project changed in this respect, that you looked at an EBITDA case rather than an asset LTV case for the first time. So this changes the picture, changes the assessment, and you have to do your homework on that. And I think it's fair to say that we start to see some investors looking at tanker, obviously more on the clean side, product tankers, and people are carefully weighing their options, and this is something we would obviously also look at. The challenge here is do the cash flows with historical metrics are there for making it a project? Yeah, that needs a certain background at the moment, I guess. But that is a bit of a broader picture, but really following the same strategy as before. No major changes here.
Evan, what about at CIT? Are you going to continue to focus on tankers, bulkers, containers, or are you going to broaden the horizons? What's happening at CIT?
Yeah, we're going to stay with what's worked. So we're going to keep our focus on the core sectors, including gas, as Philipp mentioned, similar to Berenberg. So no cruise, no offshore. We're going to stick with, okay, what we know, and try to limit the universe of what we don't know. Me and my senior colleagues, and we're a small team, the 4 or 5 of us are always thinking about where we might move, spread the margin a little bit, where we could, what other sectors are related. But at this point, it's been an academic discussion. So we're happy, and we have more business than we can handle. So we're going to stick.
Okay. Christos, what's the plan at DNB?
I mean, we finance, all shipping segments. The focus for us is not so much, the point in the cycle or the shipping segment. It's more the client. If we're comfortable with the client, if we know them for a long time, if we trust the management team, we're comfortable, with the investment decisions they make, and we are there to back them. So we are not really saying, tankers are low or containers are high, and we do tankers and we don't do containers. We just look at business plans, we look at management teams, and we look at people's track record, and we back the people we know on the investment decisions they make. That's really our strategy. But we are active on all segments.
Okay. Shreyas, how about at Citi?
The same, we're suppliers of financial services to our clients, and like all other suppliers to shipping, we will continue to monitor what our clients want and give them what it is, and stick to the knitting, do what we do best. And if we have to do something new, then support the biggest clients and the top quality clients. That's always been Citi's strategy. So continue to do that.
I think this opens the door to the next question we have on our agenda. Is the door open for new clients, new business, or will you continue to focus on what have been described as tier 1, first tier clients? Shreyas, what's your thought on that?
I think the straight answer is that we want to stick to the tier 1 clients, because that's probably, as you enter a period of volatility, it's kind of silly to go out and do new things with people you don't know, right? So that's the straight answer. But there is a hidden answer there also, which is, as we go into the ESG challenge, you can't take the approach of, I'm just going to stick with the people that I know, because there are other more important objectives as a society for us, which is to decarbonize. So if you're going to decarbonize, you cannot shy away from dealing with smaller clients who might have innovative solutions, who might have a smaller need, but somehow you've got to find ways to fit that into your target market strategy. And so the key element there is, what support can governments and regulators bring to help banks do that? So it's not that new clients are to be shunned. It's more about, how do new clients fit into the regulatory and capital management landscape of banks that we have put together over the last 60 years in shipping. They don't fit. So there is no way right now of easily financing these smaller clients. They don't have 3 years of profits. Some of them don't even have 3 years of financials. Their assets are brand new in a niche segment. You can't get a liquidation value for it if you tried. So what is the way to do this? It's to do it with government support and to find clear ways of linking bank lending and bank support to regulatory support, so that maybe zero capital weighting or whatever it is, or ECA wraps with 100% ECA wrap from governments, and then tying that back to the decarbonization targets at a national level or at an industry level. So there is a lot of work to be done here. And so those new clients that we talk about really are going to fall into that kind of category, which is how do we deliver decarbonization while supporting new clients who are doing more in that space?
Thank you. Christos, I noticed you nodding your head in agreement with some of the things that Shreyas said.
Yes.
What's your thoughts?
I think he summed it up very, very well. I think most banks, including ourselves, are comfortable with their existing client base. A lot of us have gone through, long exercises over many years trying to figure out who fits and who does not fit with the various business models. So, especially in a period of uncertainty, you're not necessarily out there looking for new clients. Yes, you might add the odd client. You also have, private equity who is investing in different vehicles, and you might end up, getting new clients that way. But the big question is what Shreyas said. What we see so far is that it's the bigger clients, it's the bigger names that are spending money trying to understand energy transition, making investments on energy transition. Again, these projects, are financeable, but they need, a number of stakeholders to come along. It's not just, bank financing that's going to take these projects off the ground. But when it comes to smaller players, with innovative ideas, the bar is a little bit higher, and that's where you need structured support. Above and beyond, what banks can provide. You need other stakeholders to come together and provide incentives, and the banks will be there. I mean, we have our own targets, we have our own ambitions. We've, got our decarbonization and net zero goals firmly set up, and a number of new solutions, new clients, could end up having innovative ideas that are going to shake up the industry. We need to be there for them, but we need help from other stakeholders as well. You cannot look just at the banks to make this happen. A strange way to answer your question, but I think you get the feeling. It's a tricky minefield, and that's what we spend most of our time trying to figure out these days.
I noticed Evan and Philipp and Ilias, you all seem to be nodding in agreement. I take it generally that's the view from your various institutions. I don't know, Evan, would you like to chime in?
Oh, we definitely want more clients and more business. We want to stick in our core markets, the core sectors, and that's the ambition. If we can do, you mentioned tier one, so that was I was thinking about tier one. Yeah, for those like larger publicly listed, great. We'd love to do more with the Gencos, the GSLs, the Navioses of the world. The medium-sized companies that have 15 ships and are family or private owned, we'd love to do more with that. So yeah, the world is big. Fortunately, there's a lot of business out there to do.
Good. Philipp?
Yeah, I think it's an interesting point. You know that Berenberg is obviously rather focusing on the good tier 2 clients ourselves. So we explicitly stick to this clientele, which we think is a highly reputed and also well experienced clientele for doing business with. So this will not change. But I think I share the view of Shreyas and the others that for the SME owners, this will become challenging with these new regulations, ESG related, which come into the game. And I would rather extend this concern to the question who will finance secondhand tonnage at all in the future. I think this is one of the major challenges, and that 40 to 60% of the world fleet is still in the hand of small and medium-sized owners, and those are those who still have these second-hand vessels. And I think the industry has to care about this securing the ongoing financing of the second-hand fleet of the world. Otherwise, we have kind of risk of a what I could call lost generation of vessels, which are today maybe between 5 and 10 years old, and which still need bank commitment for the next 10, 15 years. But look at the regulation, how it comes in, and I think we all share this that banks will have partly a role of kind of ESG control or police, yeah, in that way, and take over some of the regulatory needs. So we have to answer that question: how to finance second-hand vessels. And this is something I think we are under pressure from regulators, but also from investors to answer that question. And we need support. I agree from probably public sources, yeah, who have to understand themselves that financing second-hand fleet is something which is sustainable in a way. But also, I think the industry itself, so the ship owning associations, the IMO, all these bodies, they have to make an effort to explain to the public, to the world, to the policy leaders, how to run this fleet which is existing. And it's not the same like exchanging your Volkswagen or your Mercedes at home. Yeah, it's a big 25-year investment, multi-million-dollar. So you have to answer this question I think on a political level. And I think otherwise we really have a risk for this second-hand tonnage financing, which we like to further pursue. But sorry for being a bit long here, but I think this is something we think is a major issue for going forward.
Thank you. Ilias, let me throw a little bit of a wild card at you. It's a question that popped up that is a little bit related to what we're talking about. And it states, when do you think stupid money will appear to provide the incremental / marginal financing for completely new entrants who are pursuing a leveraged asset-light model? Any thoughts on that?
And when?
Yeah, when do you think such money might appear?
Well, there's always, as we've seen also what happened in shipping many years ago, there's always people with more money available, and we do live in an environment where there is significant availability of money and both private equity available. That is being pumped into shipping in some way, shape, or form. I don't think we are though in a stage of the cycle where in shipping, stupid money is being pumped in, because the industry has gone through a lot in recent years, and investors have kind of learned their lesson. So I don't really believe that we are at this stage as we speak. What will happen in the future, and whether someone, for example, may come up with a solution that seemingly deals with some of the environmental aspects that turns out to be wrong, and that solution is backpiping, is something we've seen. But at the moment, I don't really see stupid money being pumped into the sector.
Great.
But also, if I may just briefly comment on one of your previous questions that was raised, because two things I'd like to make. A, from our perspective, we have a slightly different kind of business model, whereby maybe because we have the ability, or we're a growth business in shipping, we do have the appetite to see more clients and invite more clients into our books. We're also focused on the right clients, like everyone else is. That's the first point. The second point is echoing some of the comments that were made by the panel. One other aspect that I think is important and is creating, continues to be raising the bar for the type of business we as banks do, is the regulatory aspect, which sometimes we do forget these days, because we focus more on the ESG aspect. But I think the regulatory aspect is still requiring, poses a high bar for banks doing business going forward. skewing kind of towards kind of better quality counterparties. And that's something that we need to keep in mind, that it's something that hasn't gone away either. And it's part, I think, of the array of problems that we're facing as an industry, and some of which kind of Philipp kind of alluded to before, that we need to deal with as we move forward.
Thank you. It's very nice to hear that. We've talked quite a bit about ESG in various responses to these questions thus far. So why don't we sort of dig into that a little bit more directly? And I guess the sort of broad question that I have is, how do you factor ESG principles into your lending strategy? Are you focused really only on the E portion of that, or do you also want to have an impact with your clients on the S and the G elements? And just randomly starting up, Shreyas, what's the view from Citi?
I think it's just a matter of measurement and difficulty, isn't it? Because we would love to have a full impact on S and G as well, but right now we're starting with E, and I think it's the measurable aspect as defined, let's say most ably by the Poseidon principles. So we are beginning with that. We have mechanisms now in place for reporting. It's a sea change from what it used to be. So I think we're focusing on the E, but we also have softer conversations with clients about S. And in some cases, the governance aspect doesn't play a major role. We're very confident on how things are doing, because that's part of our onboarding and constant monitoring process. So I think E, I would say, is the primary focus, with softer conversations on S from time to time.
Christos, what's your view?
I think I agree, but slightly different angle. I think banks have always been focused on S and G when it comes to seafarers' welfare, when it comes to governance, when it comes to KYC, even stricter now. So these have been major areas of focus. What is really new, or what has really come as an avalanche, is the focus on E. And yes, the Poseidon principles have been a gigantic step to give us some visibility on, what's the carbon footprint of our portfolio. We did not even have a number on that before. And you see a lot of focus on E, just because it's new and just because it's so big. The other two we've always, been focused on, have been part of our credit process throughout. Yes, we're focused on them. Yes, more work needs to be done, but E is really what is revolutionizing our industry now.
Thank you. Evan, what's your view?
I very much like what Christos just said. The S and G has always been embedded in the KYC process, on the onboarding process. Funny, for such an old industry, the S and the G is a focus on that has been around for a long time. And on the on the environment, on the E, yeah, that's such an important part, that revolution of how the market is treating owners and who needs to have fuel efficient engines and the ballast water treatment plants. That's an inevitable part. It's now in the DNA of a business conversation, and how a ship owner is operating his assets that we finance. So that's a great progress on the E, and that's an important, that it's so relevant now in S&G. It's an important part already there.
Philipp, do you agree that S&G has always been there and it's E that needs to catch up at this point?
Yeah, I think generally, yes, even if I would, for us at least, underline, and maybe that's also because our clientele is maybe on this tier 2, more privately owned side, and that's still the G, so the whole governance side, even if we follow this obviously for very long, yeah, it's still something where we do a lot of education day by day. Yeah, just take these OECD common reporting standards, take the EU list for blacklist of states, which also include Panama these days. Yeah, just the world is still the world's biggest ship registry. So we do a lot of education in this area. And Shreyas, you just mentioned the soft talk. It's it's soft talk, but it's let's say friendly recommendation, so to say, and even a bit more on that, because this becomes a topic where we don't compromise like we maybe were able to do in the past when shipping was always connected to offshore and these kind of things. But otherwise, I agree. The E is the major topic for investors, and you know that we have these debt funds with these investors, and they ask questions about this, and so it's basically learning about this and educating your credit analysts, but also educating your investors on that. That's a constant exercise, and I think we all agree that this takes a major part of all of our time right now.
Thank you. Ilias, how do you view this question from Deutsche Bank's perspective?
Yeah, no, I believe that the social and governance factors will need to define kind of corporate strategy, operating procedures and principles going forward in a in a strengthened manner. I think we do all have been taking these factors into consideration so far, but I think part of ESG is to kind of set measurable metrics and incentivize clients to do better in those aspects. And I think there's room for improvement, both from a client perspective in adequately reporting, for example, such measures, but also from our perspective in encouraging the S and G part of ESG.
Thank you. Let's switch over to green projects in general and the financing for them. And in particular, I want to talk about offshore wind. Obviously, there's been a great deal of press about offshore wind, and there have been a pretty wide spectrum of views whether this is a gold rush or not for owner operators, given the limited number of ships that may actually be needed to handle these projects, at least here in the United States. And the question arose, I think, is, at least for this panel, is can the banks do it, or are the banks willing to do it on their own in terms of the financing that this industry is going to need, given the very high costs of some of these ships, particularly if they're going to be used within the cabotage or Jones Act trade of the United States. Evan, since you're here in the US, what are your views on that?
Yeah, I guess there's two comments there. One is, well, certainly we're supportive of the Jones Act trade, and we see the advantages there, and it's a unique business. Offshore, the commitment to offshore supporting vessels, that's not really our core focus. So it's important, and if we see a traditional vessel working there and it has that kind of employment, yeah, well, that's win-win, definitely. But we'll try not to stray too far away from the asset type.
Okay. Christos, what about DNB? How do you see your commitment to this sector, especially given the enormous amount of offshore wind projects in Northern Europe, and that I'm sure the bank has been involved with in some degree?
No, I think it is an extremely interesting space. I think clean energy is really, what everybody's focused on, and it's definitely the way forward. We like the sector. We are very active in the sector. Having said that, and you mentioned it very, clearly before, these are, projects that require a lot of capital expenditure. And to really take them off the ground, you need stakeholders to collaborate and come across. And banks like ourselves will definitely be there in the middle, structuring and putting various tools in place, be it export credit, be it green funds who are willing to invest in the space, and we will be very happy to bridge all this. But it's really collaboration. I think it's an interesting sector. I think it's going to keep us very busy in the years to come, and for us, it's an area of very big focus. Yes.
Thank you, Philipp. What's the view from Berenberg?
As I said, offshore in the shipping has not been our focus so far, but Berenberg has a bigger, let's say, sector expertise in offshore wind projects in general, so on the renewable side. And let's put it this way, if I had the time, I would love to look for a more integrated approach with my colleagues over there. We always talk about this over lunch, but we never do it because their industry, our industries keeps us busy every day. So we should make it more integrated, but that's maybe something more medium term.
Okay, Shreyas, how do you see it?
Well, to go back to your question, is it a gold rush? No, far from it. It's a gold rush would be characterized by lack of regulation and controls. This is extremely highly regulated. It's the marine aspect of it is a very small part of the entire supply chain around generating electricity from wind, whether on land or at sea. So I don't think it's a gold rush. I think there are lots of fragmented pockets where you can possibly act. But then we come to the SME discussion again, full circle. Are these clients that you can support? So I think there is a lot of consolidation that needs to happen. And the challenge ahead of us is to identify who will do that consolidation and what financial strength can we put behind this, whether on a government/regulatory level or private equity or wherever. But money needs to come in and tidy this up if it's going to be meaningful.
I think you're right about that. Ilias, we're running a little bit low on time. Do you have any thoughts on this question?
Yeah, no, I agree with the panel. I mean, banks should help out and will help out. It's an important area. Wind is a very important area. So I think that's, I'm just stating the obvious here, but I don't think it's a gold rush. I think it's natural way towards energy transition, and people will get involved and there's money to be made. But I think from a maritime space, from a shipping perspective, there will be interesting projects going forward to finance, and I think most banks would have interest in getting involved in the sector.
Thank you. Let's just jump over to another issue that I know people wanted to hear a little bit about. It's geographical questions. Are there any new regional or international hubs that you see providing capital to shipping, or would it only be described broadly as the rise of Asian entrance into this market? I don't know would anyone like to start with that? Maybe Shreyas.
Yeah, I mean, I have a very short answer, which helps with the time. No, I don't see any new activity out of Asia. We've seen the leasing companies and others, but it's really still Europe leading the way with some help from some strategic investors at the sovereign level, and of course American public markets also very active, Norway active. So it's traditionally the same group of people really. And that actually leads to a slightly longer answer, sorry, which is we need new money. We need new blood to come in and sort of shake up how we're going to deal with this decarbonization challenge. Thank you.
Christos, what's your view?
I mean, there is always, money available for good projects, and US used to be really the go-to place for bonds and equity. I think Norway now is really, up there. When it comes to Asia, I don't think we can underestimate the impact that leasing houses have had on shipping. Export credit agencies also have been instrumental in filling gaps at times when banks have not been overly active. Also, responsible private equity has stayed in the industry. Some of the smaller players have come out, but some of the bigger ones have really, been here and they have made a difference. Nothing new, really, but more variety than we used to have in the past.
Thank you. Ilias, what's your take on this?
Yeah, no, I agree. Nothing new. I think the entrance in capital providers entering the market are not really linked to geography, or more in terms of the product. So we have a lot of alternatives, and we also have increasingly so infrastructure funds get involved in shipping. I think all these investors have diverse investor bases, part of which could be in Asia. Part not. But overall, I think the space is a bit more interesting than it was, maybe like 3-4 years ago.
Okay, Philipp, any thoughts?
Yeah, just maybe that two things maybe to observe a bit further down the road is first what happens in Asia. We have seen, for example, Japanese banks being hit by the aviation crisis, and then this also, let's say, making them looking a bit more carefully at shipping for a while. Let's see how this China real estate let's say development develops further, and what this means then for their lending capacity for shipping. That's the one point. The other point is obviously, and this is positive, that maybe new sources come in outside the banks, and then again inside the banks, because obviously then if industry comes in with contracted cash flows, this might bring other commercial banks back to the scene, being able to finance projects. These are the two little comments I'd like to make here.
Well, that's fine. Thank you. I see Nicholas has rejoined us, so that means we are officially at the end of this panel. And I'd like to thank our panelists for their insights and input here today. It's been all very interesting and engaging, and I am very pleased with had the opportunity just to ask the questions, which is the easy part. So Nicholas, over to you.
Well, I would like to just say thank you very much. As expected, this has been a tremendous panel, and thank you, Dan. Thank you, Christos, Evan, Ilias, Shreyas, and Philipp. Thank you to all of you.
Thank you very much.
Thank you very much.